Two. Hello, everyone, and welcome to Real Estate Right Now, where we talk about real estate matters that matter to you. We are live, kind of.
We're live.
We're live here from the Linda Craft Studios here in Raleigh, North Carolina, part of the Greater Research Triangle Park. Today, we're going to talk about credit. Credit is one of those things that we tend to avoid, I think, because, I think we want to go, well, my credit's just fine. And then when it comes to purchasing a house, what we find out is, well, maybe my credit is not so fine. Well, today we brought back, of course, Paul Fitz, who you've seen over and over and over again.
Probably one of the most 10-time champion.
Yeah, he's the champion of the most seen guest that we have on the show. He is senior loan advisor for Advantage Mortgage. And welcome back.
Thank you, brother.
Welcome to see you.
Good to see you.
All right, so let's dig into credit. I think, when we started the show, most people feel like the credit's probably good enough to get a house. And then they run into the problem of that it's maybe not good enough to get what they want. And there's a lot of myths when it comes to credit. So
what kind of myths could possibly be out there about credit?
Right.
I mean, you got guys like John Cena riding purple cows these days talking about credit.
Right.
So what kind of myths could there possibly be?
Right. Yeah. So give us a few myths.
Yeah. Number one myth, number one thing that I hear from clients, well, I don't want my credit pulled because my scores will drop. Really?
But I've heard
what are your scores? Do you know what they are? Do you know what they are?
Well, you can get this thing that John Cena is promoting, right?
The purple cow thing.
The purple cow thing. Right. Okay.
But yes, people can, do the Experian.com. They can do the Credit Karma. Right. But the truth is, we mortgage professionals, not just myself, but all the preferred lenders on, Linda Craft's team. Mm-hmm. I would say that all of us have at least a master's, in credit counseling or even a PhD, even though they don't really have those courses. But we've all had the experience, over our 20 plus years of being lenders, of how to advise people and how to counsel them on to have good credit. But again, they have to let go of fears.
Sure.
And fear number one is, I don't want my credit pulled. At that moment, I equate things to being like a doctor. And, that you're, you feel a little off. You're not 100%, whatever. You don't tell the doctor what you need and then he just prescribes it to you. He has to examine you. And when we are pulling people's credit, we're actually examining them. We're giving them an examination.
Okay. I get that. But where does that myth come from? Do you think where oh man, if I go to 4 different mortgage lenders, my credit is going to be so dinged that I'm not going to be able to purchase a house.
It could have been something like that in the past. And the truth is, people conflate everything that happens in the credit world. If you go to a car lot this weekend and you want to buy a car, that one car dealer is actually going to pull your credit report with 10 different companies all at the same time because he wants to see what each company's finance will be able to offer you. In doing so, guess what happens? Your score drops. So the myth of dropping my score is based on something else versus what we lenders do.
Right.
In fact, the CFPB a few years ago, they told us that you should be allowed as a customer to have your credit examined and see if you can get the best deal. So therefore, if your credit is pulled a few times during a mortgage process, if you're out, rate shopping, it's not going to ding you. But they still have the fear because it's something they heard once and it stays with them forever.
And by the way, this has been going on since the 90s. I remember this
easily. Yeah.
That in the 90s, people were like going, oh, you don't want to get your credit pulled because every time you get it pulled, it's going to get dinged.
How are you going to get a house if you don't get your credit pulled?
Right. That's it. Right.
How are you going to get it?
Right.
I mean, if you have $500,000 laying around, you can pay cash.
Right.
But why would you use your money when you can use mine?
Right. Okay.
I'm pretty good about giving it away.
Okay. All right. That's a great first myth, by the way, because I think that's a great first myth. All right. What's the second good myth?
Oh, the other myth is that when I'm going through somebody's credit report, when I'm looking at their credit, they'll say, well, I think my credit's perfect, blah, blah, blah. I mean, you pay your bills on time. That's great. But that doesn't mean that your credit is perfect. And part of what we do as mortgage lenders, we counsel people towards what they should be doing to their credit.
Right.
So even though you pay your bills on time, let's say that your credit card bill is $25 a month. Okay. But your balance is like $3,000. Oh, and by the way, your credit limit on that is $3,500. Okay. What you're doing is you're squeezing your most available limits at that point. And when you're doing that, that actually hurts your credit. So when I look at people's credit reports, I'm like, wow, so you have a $500 credit card and you're at $450 and you're questioning why your credit score now is at 620. If you pay this down to $25 versus the $450,
right,
your credit score could go up to 700. It's a total picture, total scorecard.
See, it's a credit thing when you talk about credit cards.
Correct.
It's kind of interesting because what you're saying here is the person is going to come back saying, well, I'm paying my bill on my credit card on time.
Pay them on time every month.
But the problem is your availability of credit is so low.
Correct. You're squeezing that lemon. If you're 7 feet tall and the roof is only 7'2", usually when you step, you're going to hit your head on the ceiling. And that's what they're doing on that. They're hitting their heads on the ceiling and they don't realize that that's a harm for them.
See, that's great information people need to know.
But they don't know.
Well, no, they don't, because I think what they do is they think I'm paying my credit.
Paying my bills.
I'm paying my bills.
I write a check every month.
Right. And I'm
$25.
Right. But at the same time, you've extended your credit limit.
Yeah, they're hurting themselves.
Got it. Okay.
So, but yeah, as a mortgage lender though, all of us, not just myself, but we all review people's credit reports. And we'll say, hey, look, where you are today is a 660. But based on the availability of these credits, these credit lines, these trade lines here, if you pay this one down, by $300, this one down by $200, and this one down by $100, you can go from a 660 to a 720 just by paying some simple bills down. And they still don't realize that.
That's a great one. Okay, what's another myth?
That's a great one.
That's a great one. It really is.
But it's the totality. Credit is not a sprint. It is a marathon.
Maybe that's a myth in of itself, is that people believe that if I do everything right now,
quick fix,
right? That if I pay everything off right now, that'll improve my credit.
I'm going to pay off all my debt.
Right.
Okay. Let me tell you what you should pay off. Again.
Okay. Whoa. Now you just said, let me tell you what to pay off. Yeah. Is there certain things that you should pay off that you shouldn't, and other things? What are those type of things that you probably should be looking at?
So let's use a common thing, a medical collection. And there are ways to take care of medical collections. People think if they see a medical collection, they should just pay it off. But what they should do is they should contact that collection company who sent them, that bill, and they should say, hey, I'm going to pay this to you, but I need you to remove it from my credit report. See, a lot of people don't think to do that. They see the collection, they write the check, they send it off. They think, whatever, I'm done with it, right?
They don't follow up.
They need to talk to those collection companies in advance. They need to make them promise to remove the collection from their credit report. So I've seen reports in the past where it'll have like an $85 or $100 medical collection. They paid it, but the entity still exists on there. And because it exists on there, it's still a drag on their credit report. But if we can have the collection company delete it or remove it, then that would bolster your credit scores up by 20, 30 points, depending on what's going on in your life.
So that process of talking to the collection company, I mean, will they do that?
If we instruct them, again, make sure you're working with the mortgage lenders who are going to go over your credit report. They need to explain everything about your credit. Now, if you're a perfect credit person, you have 808 credit scores and, very little debt in this world, I don't need to coach you about anything. You know what you're doing.
Right.
But if you're somebody who's kind of languishing in the 600s and you're like, I pay all my bills on time, why am I here in the 600s? I mean, it should be a discussion that you have with somebody who pulls your credit report, who knows what to look for. But again, going back to medical collections, people just pay it. They think it's done. If you call the medical collection company in advance and you say, hey, I'd like to settle this bill with you. However, I will only do it if you remove it from my credit report. Now, some of these companies will hem and haw. They'll be like, no, I'm sorry, it's our policy. We don't do that. then politely say, well, it's in my policy not to pay you unless you remove it from my credit report. Thank you. Have a nice day.
That's pretty strong, Paul.
If you want to be a master of your credit, you also have to let the people on that side know that you're a master of your credit. Now, collection companies are not in business to ruin your credit. I want to make
okay, so that's a myth, right?
They're not in business to ruin your credit. What are they in business to do?
They're in business just to collect the monies that's owed.
To make money.
Right.
They make money on the collections that they
yeah, they're not making money on damaging your credit.
Yeah, I ruined your credit today. Woo, job well done.
We just pulled in
right.
X number of dollars.
Yeah.
Right.
Woohoo.
Yeah.
Yeah. Nobody's boss is happy about that. Right. So they're in business to make money. So you want to give them the money.
Right.
Cool. But I want you to remove this from my credit report. Right. I'm not giving you my money until you remove this from my credit report.
Here's another myth. I think it's a myth. You tell me if it's a myth, right? Is that somebody with, who's in the 600s cannot buy a home?
Oh, they can buy. People can buy. You can do FHA, VA loans in the 600s, 640 for USDA and for down payment assistance through North Carolina Housing. You can buy a house. It's not that difficult, but still, as a person who does this every day, I like to look at their credit report first. And if there's small tweaks that I can tell them to make to bring their scores up, to get them a better interest rate, to be a better program, lower mortgage insurance, there's a lot of good things that go with better credit scores.
Right. So yeah, I guess this may be part myth, part truth, and that is, what does my credit score really mean to me in terms of what I can buy and what I can't buy?
Well, to go back to that other point that you made a second ago, if your scores aren't high enough, then you're not getting a mortgage. If they're in the 560s or whatever, no underwriter would even look at the file of that. But they're like, sorry, come back some other time.
Right.
But
then you get to the sixes.
Getting the sixes.
And then what happens? You got FHA and we've got some other.
You can do FHA even in VA, even as low as 580. It's possible.
Okay. But then what does 700 get you?
Well, 700 though, I mean, you can get an FHA loan at 600, right?
Right.
But the interest rate on it's going to be 3/4 of a point higher than it would be if you're getting one at 700. So would you like to save $300 a month, $200 a month in your monthly payment? Everything depends. It's a totality. And better credit gives you better interest rates, which means lower payments every month.
Okay. So, which by the way affects your credit.
Which affects your credit. You can't pay your bills. That's exactly right.
Right. So,
see, it's starting to go around.
It's circular in a lot of sense. Is there another myth we should be talking about that we have hit yet, or are those pretty much the big ones?
I mean, people who are afraid to have their credit looked at, they should remove that fear.
Okay.
Whenever somebody on the LC team says, "Hey, I need you to talk to this lender because we need to figure out what you're qualified for,"
right?
Do not be afraid to have your credit pulled, even if the credit is bad.
Right.
Let that mortgage professional at least talk to you about your credit report to see what you can do as far as building your scores or what you can do in the future for that. Right. It means a lot, not just to me as a lender to say, yeah, you're qualified, but it means a lot to me as a lender to say, you're not qualified now, but if you do this, 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 and this, you can be qualified within a certain amount of time.
Okay, let's move on to the next section.
Okay.
Because you've been doing this now for more than 20 years.
24.
Right. And so you've been in this business a long time. So I know that you've run across a lot of common credit questions or credit issues beyond the myths. What are some of the more common things that you experience with regard to credit and credit types of issues?
Well, again, people conflate. I know I use that word, but people conflate a lot about what they hear versus what they can do. If you went and just bought a car this last weekend, you went to the car lot. They didn't look at your W-2s. They didn't look at your tax returns. They didn't look at your pay stubs. They heard you say, "Oh, I have a job," and they pulled your credit report, and then they gave you a car. Right. In the mortgage world, it is a completely different experience. I mean, we look at things, we know things about you that no car lot would have ever known.
Wait, this is a really important point that I don't want people to miss, because I think people will say, well, they're not going to look at.
We look at everything.
But you look at everything.
I look at everything. I know things about you that your mom doesn't know.
Right. I mean, it's
that time you got married in Vegas. I know.
Right. And then you got an annulled later.
That's right. The next day,
and you got an annulled.
Britney Spears. I know her husband.
Right. I mean, I'm sure you have stories of things that you've seen.
Of course. Yeah, of course.
Things that you've seen on people's credit that.
Oh God. Yeah. Oh yeah.
Is there one that ever stands out to you?
No, I mean, but usually when, like you said, going into the myths or going into the half truths or what we know, again, people take one experience for credit. Buying a car is a credit experience if you're not paying with cash, right?
Right.
You go to the car lot, you fill out the paperwork.
Right.
They find you some terms to hopefully get you that payment that you're looking for, because they're trying to just fit you in a payment more than anything else. That experience towards the home purchasing experience is totally different.
Right.
Is a different world unto itself. So a lot of people who have that car experience think, well, I'm, fill out this application in 3 hours, I'm driving off the lot. Right. Or however long it takes now. I have no idea. They're driving right off the lot. And they wonder why it takes 30 days to get a house with a mortgage, because we look at things in your life, your credit, your past credit. Did you have foreclosures, bankruptcy? Did you have these things that are what we call credit events that may impact what we're trying to do for somebody?
Well, one of your colleagues was on the show.
Yeah.
And it's been a while ago. And she talked about a situation where it was a husband and wife.
Oh, Lord. And the wife didn't tell the husband about how many marriages.
So she pulls the credit.
Yeah.
And there's this $10,000 necklace that never went to the wife.
That's a bad scenario.
And evidently
that means more than a marriage counselor at that point.
And evidently it stopped the mortgage process immediately.
There have been scenarios in that. Yeah.
Well, I mean, have you run across anything that's
I haven't had anything that detrimental. And I will tell you that, again, not myths, but legends and whatnot. When we pull your credit report, sorry, ladies, but if you've been married 3 times and you tell your husband you've been married twice, he's going to find out at closing.
Right.
That's probably not the place to have that conversation.
Yeah, right.
By the way. So we see multiple aliases. Anything that was ever attached to your social security number. I look at somebody's social and I can tell where they were when they got the social. If it's a 010 social, they're somewhere in New England, New York area. You can tell things just by looking at people's socials. And
such a great point that, you're trying to protect the spouse. You're getting married, you're newly married, protecting the spouse. And then what you do is you don't tell them, you say, well, I was married 2 times before. The reality is you were married 4 times. And then here you're pulling the credit.
Way to go, Charo.
Yeah, right. And then the next thing you know is that you're pulling credit and go, wait a minute, you were living with so-and-so, and right? Because you could see that.
Correct. And the point that you were making a second ago about joint credit, with co-borrowers and whatnot, if you're not honest about your finances with your spouse and you go into a house, home buying situation, it's a joint credit report. When it gets pulled, we're learning everything about both of you. And by the way, it's disclosed as a joint credit report to you two, that when you both see the credit items, you're like, honey, why do I have this K Jewelers?
Right.
What is this $10,000 K Jewelers thing? That's a problem.
Right.
Wow.
So maybe one of the things when you're thinking about purchasing a home and you're going to get credit is make sure you have all your, I hate to use a poker analogy, but make sure all your cards are out on the table.
Show that hand.
Yeah, right. You got
to show your hand.
Right.
It's not a willy-nilly situation. Right. This is something that, again, and I said it earlier, credit is a marathon. It's not a sprint.
Right.
Now, maybe the husband in that situation thought, I can pay this off, that $10,000 necklace off, and she'll never find out. Guess what? the credit item is still on there. And if they have a copy of the credit report, she'll be like, why did you have a credit card? Why do you have a $10,000 limit at K Jewelers?
Right.
Of course, why would anybody have a limit at K Jewelers?
Okay. Is there, I'm not going there because K may want to.
They might want to advertise.
They might want to be a sponsor.
K, we're looking for
sponsors. Be a sponsor here. We might be a sponsor.
Did we do the Cody James?
So, yeah, the Cody James. Thank you, Cody James. And Boot Barn. Let's talk about some of the other common things that you've seen when it comes to credit. What's another common scenario?
Just people's ability to think that if they bought the car, I can get a house. I will tell you guys out there, if you're thinking about a new car purchase while you're thinking about also doing a house purchase,
right.
Again, it's an easy process to go out and get a car. But when it comes to buying a house, we're going to know that you just bought a car. We're going to see that you were car shopping.
Right.
If you don't have the payment already showing up on the credit report, we're going to find out. And if it's something that affects your debt to income ratios, your credit report is going to tell on you. So if you're going to buy a car and you're going to buy a house, the same, for goodness sakes, go get the house first before you go get that car.
Well, this is kind of interesting because what you just said implies, and maybe I'm reading more into this, but let's say they're just looking at a car.
We'll ask. We'll see how many times the credit's been pulled.
That's the question then, is that you can see. So then you can see if the credit's been pulled before.
Oh, yes. How many times?
So all of a sudden you see 3 car dealerships. They haven't bought a car, but there's 3 car dealerships.
We're going to ask.
You could see that.
Yeah. We'll ask. We'll it's called an inquiry. And so what we'll do is we'll talk to the borrowers in the process and we'll see, hey, you've made 3 recent inquiries to a car lot.
Right.
Please provide us any information on any car that you may have purchased. And they could lie. I mean, if it's not showing up yet, they could lie and say, oh, I didn't purchase anything. Right. Well, 10 days before you close, within that 10-day window before you close, we're going to do an updated credit supplement to make sure you haven't purchased anything, which it will show up. Right. And that's why I always tell people, don't lie to me.
But I think
tell me the truth.
But even I think the thing is, even though if they haven't purchased,
we'll still ask about it.
Yeah, the fact that they've inquired about it and they've had their credit pulled.
Yep. We'll ask. Hey, we saw you were car shopping. Okay. Did you purchase a car? Well, no, I was just looking. Did you purchase a car?
Right.
So, we'll find out.
All right. So we're pretty low on time.
Oh, wow. That always goes fast.
And it does really go fast. So what are some of the tragedies?
Oh, man. Some people who have a lot of credit issues, sometimes it takes a while. There could literally be years. And I've worked with families for a year or even 2 years because they don't want to, take drastic steps to get their credit cleaned up. Fine. I'm going to walk with you every step of the way.
Right.
But I will tell you as a professional, I've looked at people's credit in the past and I'm like, there is no help for you here. You should look at filing for bankruptcy, learning from your mistakes, and try to figure out how to move on from that.
That's pretty extreme.
It is extreme, but it's a reality because there are some people who have some really bad credit situations that they don't have the money to overcome.
Yeah, but so maybe this falls into myth category.
Myths again.
Myth again. Yeah. But I think people would have a myth to believe then, and maybe it is true, that if I file bankruptcy, that means I'm not going to be able to buy a house for 10 years.
So, okay. And a beautiful way to put that. I mean, it really was. So there are a couple of ways around this, by the way. Number one, if somebody has some credit issues that aren't just totally destructive, they could look at a Chapter 13 bankruptcy and wrap a bunch of bad little debt into a monthly payment for the Chapter 13. And with that Chapter 13, after they've made 12 payments on it, they can qualify for a loan after 1 year. So if you file a Chapter 13 and you make 1 year of payments and your trustee then agrees to it, you can possibly buy a home after 1 year. And you can do that with FHA and VA, by the way. But if you file like a Chapter 7, if your credit is just damaged beyond all repair, and there's no real help for you, you may want to look into a Chapter 7. But remember, it'll be 3 years before you could purchase a house at that point. and it has to be discharged after a 3-year period. So,
okay. So let me ask you this, and because we're running tight on time, do you have programs that if people are struggling with credit that they can?
So the truth is we have credit companies that we can send people to, but for my clients, I want to work with them personally. I can help them overcome their credit issues, especially if they're minor or just collections, or maybe they've got too much debt on their credit lines themselves. I can look at your credit report and I can tell you how to pay it down or get rid of the credit collections or whatever it takes to bring your scores up. And for most of these clients, I can give them a reasonable amount of time for how long that will take.
So they can get a time frame.
Correct. Yeah. Like, hey, you got a lease for 6 more months? Good. In 6 months, I need you to pay down these 3 credit lines. I need you to get rid of these 2 collections. And from today, your 620 credit score will be a 680 at that point.
So here's something that's not a myth about credit.
Okay.
It does require some discipline.
Oh, 100%. It's a marathon.
Right.
It's not a sprint. I think we've all known people who have had credit issues in their past. I had credit issues in my past at one time.
Sure. Me too.
I learned briefly how to figure it out.
Right.
But after that, it was definitely a discipline. It's just like, are you working out every day? Are you eating right?
Right.
Are you paying your bills on time? And are you paying them down?
Right.
Living within your means.
Well, this has gone fast. It always does. I know. Tell people. I know. Tell people how they can get a hold of you.
Well, thanks for having me on again.
No. It's awesome.
Yep.
You're awesome. This is great information.
Again, my name is Paul Fitz. I'm with Advantage Lending. My cell phone is 919-612-0043. That's 919-612-0043, or PFITTS@AdvantageLending.com. And as always, Jay, I appreciate it.
Thanks, man. This is fun. This is good, great information.
Did you learn anything today?
I learned a lot. I always do. Whenever people are in the studio, I learn a lot. Listen, folks, you've been watching Real Estate Right Now. Listen, you had a lot of choices. You chose us. We appreciate it. Wherever you're listening to this show, would you please give us a positive review, 5-star review,
give us a like.
and then let other people know that you have learned something here at Real Estate Right Now. You know what? I thank you all over the world. You guys have been great. For those of you who are now watching us on DBTV, thank you for watching us on Saturdays in the morning. We appreciate you. As I say to you everywhere all over the world, ciao, everybody.